Hey there, my name is Eric, and in this video, we're going to take a look at a short-term bearish trade on the SPX. As you can see in the chart, the market's had a pretty good rally and broken the new highs recently. And really what I'm expecting here is a little consolidation, maybe a small pullback, nothing major, but we are seeing some strength in bonds, and we'll take a look at that in a minute. Before we look at the setup though, if you'd like to get free email alerts for these types of trades, you can follow me on StockHoot. I've got an account set up there for vertical spreads, and I'll put a link in the description of this video if you want to check that out. I'd like to also invite you to join my new Facebook group for options trading, and I'll put a link in the description there as well. That way we can get to know each other and share charts and things. We just got that started a couple days ago, so it's still pretty new, but definitely looking forward to meeting some of you guys through Facebook. So let's take a look at the SPX real quick. As I mentioned, you can see that the market's kind of broken to new highs, still very, very bullish. And just because this is a short-term bearish trade, doesn't necessarily mean I think the market's going to crash or whatever. But as we hit these new highs, a couple things are happening that, and from a macro perspective, one, the dollar continues to go lower. In this particular economy, a few years ago, this was actually good for stocks. In the past year or two, as QE came to an end and they're starting to raise rates, this actually is not good for stocks, I don't think, because it's telling that the economy isn't as strong as they think. The Fed may not raise rates as much as they said they would, and what that does is weaken the dollar a little bit. And the market's going up on this, but I don't think this holds. I think as the dollar gets weaker, the market's going to have a hard time breaking out. So that's sort of my own opinion on that. But if we also look at the bonds, TLT is up more so than the market. The market's relatively flat on the day. We're kind of hovering around zero, but we're getting some strength in bonds. I mean, from a chart perspective, it's not that great, but there is this sort of uptrend. So there's still a bid for the safe haven here. So I think, I think at this point, since the market has pretty much broken out, we're looking at, maybe we get a little bit higher, maybe 2480 or something. I don't know. But ultimately, I think we sort of consolidate here. It's very similar to this area where we rallied up, we broke out a little bit, and we kind of traded sideways for a few weeks, actually. So real quick, if we put a fib, let's put a fib tool on this one. And this recent low, this is where we kind of broke out. I think it depends on where you want to draw this. This is kind of where it was. This was sort of a false breakout, but you can see that we're trading somewhere between the 27 extension and the 618 extension. And this is really where it starts to get, the resistance will start to kick in a little bit. So any kind of pullback in here, I think is expected, or maybe even back to this 2464 level, I think is something to kind of keep an eye on. And so the way I'm playing this is with a bear put spread that's in the money. So what I did was, and I got some markings here, I bought the 24.95 put and sold the 24.90 put. So this is an in the money put spread, and as long as the market stays below 24.90, this spread will mature and grow in value. And we'll look at the analyze tab here in a second, but I got this spread for about $4 per spread. So it's $400 per spread. And if these expire next week, and as long as they the market stays underneath 24.90, the spread will eventually become $5. So you can make 20% or so, a little bit more than 20%, as long as the market stays below there. Now it could go up and chop around, all that stuff. You get a lot of movement in the actual daily P&L, so you don't really want to look at that. But ultimately, with the volatility so low, and I don't have it pictured here, but the IV percentile of the SPY or the SPX right now is like 2. The volatility is just super low. If we take a look at the VIX, it's way down here. So for me, selling options here has been difficult. I've been trying to, I've been having a difficult time. And I'm saying this because a lot of people would say, why don't you sell a call spread instead of buy a put spread? And it's just a different way to kind of slice it. Ultimately, it's the same thing. You have an option that you've sold and you're looking to collect theta over the next week, and you pick their levels. This has a 70. The option had a delta 70, so there's like a 72% chance it does expire in the money. But I want to go over to the Analyze tab, and in this account, I have one of these trades. And again, this is one of the ones I posted on StockHoot. And you can see that basically we are trading, let me add, this is where the market is right now. We're trading about 24.76 as I'm doing the video, and I'm down slightly in the trade here. But ultimately, as long as the market stays below 24.90, the break even is actually 24.91, then this spread could make $100 per spread. So if I, let me remove this slice, and right now, the break even is right here at 24.91. And you can see there's an 87% chance that the market stays below that level. So as of right now, this trade has about an 87% chance of making money. Is it going to make the full profit? Well, no. If it rallies up somewhere in here, you'll see you make a little bit less. So this is a very high probability trade. You know, you can, it's a short-term trade. There's only 8 days to expiration. This expires next Friday. So it's something you can look at. So that's all I got for this video. Again, check the description if you want to join the Facebook group and hang out with us a little bit there, and as well as check out the profile and my track record at the Stockhoot site. And again, both links in the description. Have a great day. I'll see you at the next video.